Let's get in then. Sandeep Daga, he's Director, Rexus Consulting Private Limited, and he joins us on a Mumbai phone line. Sandeep, hi, welcome. The kind of cut that we are seeing in last couple of sessions now, how are you reading it and how is it looking on charts really?
Hi, Manisha. There were two words which put together a bull market in metals for the last 10 years. It was Chinese demand. It's the same thing which is pulling it down now. And as the data comes out, the Chinese GDP and industrial production, market is reacting to it, feeling vindicated. I think, Chinese slowdown is creating a pessimism in the base metals market. Been there for some time, and we knew that's coming, and that's spreading. Base metal coming down here does not really surprise me, but I think the fundamental picture is worth looking at is that whether the market has bottomed here, whether the price has priced in all the pessimism, whether it has some more downside, or whether one should be buying or selling here. There's a big difference between commodity market and equity market. Commodity market is more dynamic than equity market, and I always tell to my clients is because the prices make the buyers and sellers, the consumers and the suppliers change their business strategy accordingly. When the prices come down to these levels, aluminum at $18.40 and zinc at $18.50 and lead around $2,000, these prices are very, very low for any producer, for most of the producers around the world to make money here. And please remember, a lot of capacities have been added in the last 5 to 7 years in China, in India, and several parts of the world, where these capacities were added in good times, on debt, interest cost is high, and these people cannot make money here. Therefore, from that point of view, the prices here is constraining suppliers to add more capacity and produce around here. But at the same time, I think the biggest buyer, China, is on the back foot. They're not buying here. Even if the prices come down to these levels last year, when they had come down to these levels, China was aggressive buyer. They're not buying this time around. So really there's a slowdown, which is clearly showing up here, and there's no doubt about it. But at the same time, we need to understand that commodities are seasonal businesses as well. So the structural slowdown is there, but at the same time, the commodity cannot keep on going down because at the lower prices, the consumers, which are running very, very low inventory levels, where the physical metal market has shortage of metal because of, large traders cornering, surplus metals from the market. So the consumers are ready to buy around these levels. The consumers that consistently are buying is what I'm hearing at the moment.
Okay.
Chinese buying is there very much at the lower levels. But we have seen that consumers can only provide a floor. They cannot provide a trend to the prices.
Your point is well taken, Sandeep. But, after all this decline, and as you pointed out, there still are no buyers at this kind of levels as well. What's your sense going forward? I mean, we have seen a negative previous quarter. How do you see this quarter ending?
I think I'm broadly positive towards base metals in this quarter at least. I think we have seen of late good data coming out of China. I think GDP was bad, but that's a backward-looking data. The forward-looking data is going to be PMI, which has been improving for the last 2 months, and we will see next release of PMI, flash PMI, on the 23rd of April. I'm positive the data should be good. At the same time, we also see the bank lending, in fact, going up. In March, the lending was near record level of 1 trillion yuan. We are also seeing the commercial vehicle sale in China picking up. Actually, this is higher than last year, and it's in fact better than the average of last 12 months. The numbers are showing that China is not going down too much. It's moderating, but at the same time, the demand is seeing some seasonal pickup. So I'm quite positive that any good data from market is severely short, Manisha. Let's look at it this way. Copper short position CFTC are near what it was in March 2009. So it's very, very severely short. So market knows there's a reason to worry, reason to be pessimistic, and market is pessimistic already. So but from going forward from here, any positive nudge from China can spook all these shorts. So I'm not selling here, but I'm advising all my consumer clients to gradually put in place a hedging program to keep buying at least for the near term.
Fair point, Sandeep. We'll let you go at that. Thank you so much for talking to us. That's the view, of course, coming in for the base metal prices. But for the other commodities, let's also get in now. Sushil Sinha, he's country head, Kavi Comtrade, and he joins us on a phone line as well. Sushil, hi, welcome. We were discussing base metals right now, but the sharp decline really has come in for the gold and silver prices at these current levels for the intraday market. What's your sense?
Yeah, definitely seeing the trend, we should be in the selling side only. There is no logic behind going for buying it in any of the non-agri sectors. So try to trade intraday only, and because rupee is also going to support, it has appreciated. So therefore, we need to be in short side only, sell side only, and I don't see any reversal of trend. However, pullback can be expected later on. For the day or two, it should be on the selling side only.
Well, we did see an initial pullback, but the gold prices have started their downward journey yet again. 1410 just about holding in the international markets right now. It's a very steep correction or decline coming in right now. 4.5% of a cut and still counting on the downside for gold prices. On your screens, nearly $70 shaved off in case of gold at this point in time in the intraday market itself. What's your sense, Sushil, coming in for the silver prices now, because the cut there has been deeper?
Yeah, definitely, because now it is 23.75, 80 range the spot silver. On the MCX also, it has fallen by more than 4,000 rupees. Definitely, we need to be on the selling side again here, and maybe around we can see further 44,300 to 400 level for the day. So therefore, we need to be in the selling side, trying to trade intraday would be the best strategy, and there is no pullback in sight, whether it's national or international news. Therefore, selling is advisable.
Sushil, before we let you go, what's your worst case scenario coming in for gold and silver, both these prices in the Indian markets? Because 4,000 rupees shaved off in a matter of minutes and 8% down on gold and silver, both these commodities. What's your worst case downside now for the day?
Yeah, downside we should go for gold, can be around 26,300 to 350 level, and similarly for the silver can be around 44,400 level.
Bharat Kumar, director at GFM, joins in on the show. Bharat, let's start off with gold, considering the kind of damage that the commodity has been witnessing.
I think in case of precious metals, especially gold, the way it has broken below $1,530, which happens to be support since 2011, the major trend which has started in 2002, I think that has turned bearish. So to that extent, I think one should hang on to short positions and probably sell to an extent of sell on raise to an extent of around 28,000. On the lower side, we're expecting around 25,600, which confirms to around $1,320. So in case of precious metals, especially gold, and even in case of silver, in case of even silver, we are expecting around $19.40 to be tested in due course of time after it has breached $26.40. So even in case of silver, one should be on short side, and especially in case of gold, I think the market is heading towards $1,420 initially, and then afterwards $1,330, which confirms to around 25,600 ranges. So the major trend has just turned bearish.
Right. So major trend continues to be bearish as far as gold and silver are concerned. But what's your view on copper?
Even in case of base metals, the trend is still bearish, wherein the market is still continuing the bearish trend which it has set up during last month. In case of copper, it is consistently trading below 404 rupees on MCX. So to that extent, I think the market may test around 382 ranges. So even in case of base metals, the trend is still bearish, and probably further sell-off may be seen. Major support is seen in case of copper at around 382 in case of MCX. So I think the market may test 382 ranges in due course of time.
And what about your views on crude?
In case of energies, the divergence is still seen in case of crude and natural gas, wherein in case of crude we have seen the market selling off from $98 and now it's trading sub $90. So to that extent, I think the market may test around $85.60 in a couple of days. So even in case of crude, I think one should be in short side. In case of MCX, probably the market may test around 4725 to 4730 ranges in due course of time. So even in case of crude, we have seen the overall spillover of the sell-off from precious metals, which is being again felt in energies also, especially in case of crude. So in case of crude also, one should hang on to short positions, and one should expect around 4725 ranges on the lower side.
Let's get in Chirag from AskChirag.com, and he joins us on the show with his strategies on commodities. Chirag, hi. What's your sense coming in for the gold prices now? With the kind of declines, how would you want to trade that today?
In the domestic markets, prices have an important support level at 26,400 levels. If we have a weekly close below 26,400, then the prices can move lower down till 25,400, and once 25,400 is taken, the next long-term support is coming around at 23,200 levels.
Very bearish cues, Chirag, but what's your sense now coming in for crude as well? Because there have been sharp declines, more than 2.5% down on screens even now.
Along with the selling in the precious metal, crude prices also started falling, and it took support around the medium-term range of $89 to $90, and since Asian trade in the morning, it is trading in that band of $89 to $90. If in the middle of the week the prices start trading below $88.50, which is a very important weekly support now, then the prices on that front also can slide down towards $84. On MCX, crude oil prices have a strong support at 4930 level. If the prices sustainably trade below that, or we see a daily close below that, prices can move lower down till 4700 levels. If the prices are holding on 4930 levels, then I am expecting a range trade of 4930 to 5080 in this week on the crude oil prices.